Hey guys, so in a few days I'm going to attend the conference on uh, market liberalization in Bali, and I made a little presentation, and basically this is a test to see how long the talk is, and I thought I would try recording it also. So the talk is, see, is recording. Okay, the talk is about Bitcoin, and specifically a quote that Jeffrey Tucker made a few years ago. And he said that the existence of the blockchain ultimately means the death of the nation state. And I want to basically discuss what that means. So I had a brief stint as a Bitcoin entrepreneur, and I met some of the big names in Bitcoin, and I talked to them and I asked them, why they were in it. And some thought it's just a cool idea, cool technology, and they were in it to make money and have fun. And some were quite intellectual about it, or not intellectual, but they were um, they were activist about it, and they thought that Bitcoin technology and cryptocurrency actually has the potential to um, take down the nation state. Maybe I took Jeff's quote a little too literally, and I want to talk about why I think Bitcoin may um, mean the death of the nation state. And I mean specifically nation state as opposed to state as such. And I will explain what I mean by that. So I'll talk about a few things. I'll talk about what is the nation state, nature of money, nature of Bitcoin, um, the difference between market and state activity, what the state's power depends on, what kinds of things cryptocurrency might enable, and how things may play out in the future. So my goal is not to convince you that Bitcoin means the death of the state, but rather to show you why many Bitcoin evangelists believe what they do. And then you can decide what you think for yourself. So first, I want to give some background about how the state originated, because I think many people are not aware that the state is actually a recent invention. So before the nation state, a few hundred years ago, we had city-states, of course, dating back to ancient Greece and before, that had loosely defined borders. And states or empires, actually, like the Roman Empire, were multi-ethnic societies. And they were usually ruled by royalty. They didn't have a distinct culture. They had maybe one dominant culture, but had many other cultures. And the territory was depended on, intermarriage and contracts. It was not felt by the people that they had to belong to the state. It was something that was very fluid and would change dramatically, from time to time. Um, so, for example, the Austro-Hungarian Empire is one of the last examples of such a multi-ethnic state. I'm sorry, state does not a nation, because actually there were many ethnicities that were a part of it, and its borders change quite often based on royal marriages. Um, so that the Habsburg family, would acquire or lose power and influence based on where the various offspring became kings and queens. So then we had this thing called Romantic nationalism, which we saw in the French and American revolutions, and then many other countries, where suddenly people had developed a sense of national identity. And I think one of the major developments in that was Germany under Bismarck. Germany was a people, but it was dozens or hundreds of small city states, and they were united under this vision that Germany would be more powerful if it was one state, uniting this culture. And the end result of that was Nazi Germany, where Hitler sought to unite all the Germanic peoples under one state. That he felt that was the strongest um, structure, and you know, since the late 19th century, basically the whole world um, has adopted this structure of or this idea that all people should be geographically grouped according to their some kind of national identity. And well, let me take you to the timeline. So in the late 18th century, we had the French American revolutions, and at that time, most Americans didn't support the American Revolution. They didn't feel very American. Only half of the French actually spoke some French. Um, but that's when he started the idea that people ought to have a sense of national identity and not simply be ruled by whatever royalty got married and was granted their region. And then, nationalism was at its peak with Mussolini and rise of fascism, and the idea that of the total state, that all people should live their lives to serve the state. And fascism is one of the clearest expressions of self-sacrifice for the state, and the Nazis were very explicit about that. And so I mentioned the gold standard because that's one of the main ways that states have funded themselves by control over the currency. And and with the fall of communism, now we have the idea, it's commonly accepted, that democratic governments ruled by the people and is the only acceptable form of government, and it's kind of a the end of history. All societies from now on are going to be ruled by democratic societies and having these. Well, let's look at what people mean by the nation state. They mean that the borders are basically semi-sacred, and the state, as according to people's will, controls economic trade and human migration. It has complete authority over economic monetary policy within its borders. It sets the currency. It has a powerful bureaucracy that has the power to collect taxes and enforce regulations. There's some kind of uniform national culture, and the state acts to spread that culture through compulsory education and some control over media. And it has a military that's paid for by taxation and conscription. Can I move this out of the way? So, what made the state possible? Part of it was ideology. So we had, Rousseau and German writers who had this idea that people of a certain national identity should be united under one government. But also we had a lot of technologies that made it possible. When it took many weeks or months to travel across America or other countries, or we didn't have accounting, you could not effectively collect taxes, you could not effectively enforce national policies, and you couldn't effectively have control over all the regions of your nation. But it was these technologies, roads, telegraph, maps. That the first modern map, the top-down projection that we use for Google Maps today, was invented in the mid 18th century. And then public administration, the idea that government should be distinct from the people that are currently in power. That's actually came about in Germany, and Woodrow Wilson, and basically was the inventor of public administration as a field of study. Okay, so that's the state, and as I mentioned, it's pretty much been accepted that this is how it's going to be, from now on, forever. So let's talk about money. So money is a medium of exchange, and it exists to solve several problems. One is the coincidence of one's problem. So if I have a sheep and you have a goat, and I want your goat, but you don't want my sheep, you want eggs, and our friend has eggs. We can try to solve that through barter, but then we have to have a lot of negotiation, more parties involved. And as the society becomes more specialized, it becomes a lot simpler to have some token that we can exchange that intermediates value. The other things that money provides is you can store value over time, so you can spend it later, and you can measure value. I think we all understand that. But one point is that money emerges organically in any society. It's not created by law. Money has always emerged as soon as society becomes complex enough, basically as soon as it has division of labor and becomes more efficient to use a medium of exchange than barter. And so money usually emerges as a commodity money, meaning that it's something that's inherently valuable, such as gold and silver, but not always. It could be things that are just rare and are useful, a useful token that can be used to represent value. Okay, so that's what money is, but what is fiat money? So fiat money is money that's not redeemable for some commodity good. So it was invented by nation states in maybe the 19th century and made universal in the 1930s by pretty much all governments. And it became possible because it became actually possible to prohibit free market money. So fiat money has advantages for governments in that they have control over monetary policy, they can print it and create it. But it's disadvantageous to the users of money because it tends to lose value over time, and you don't want to do that with your measure of exchange and store of value. So it became popular basically because governments were able to ban free market money, and banks actually often supported because they're one of the parties that governments give the money to. It's the individual savers who suffer the most from the introduction of fiat money because of inflation. So inflation is the printing of new money in order to first direct that money to some politically desired recipients, which could be the industry or electoral groups, in Zimbabwe or Venezuela. It could be the poor, but often as corporations and banks. And the other reason is to create politically popular macroeconomic outcomes, basically higher GDP numbers. But what it really is theft of assets from wealth producers to the money printers, because fiat money is inherently worthless. The value comes from the value comes from the ability of money to buy goods, and it's the ability to it's that which gives the money value. So inflation is the theft from the wealth producers to the money printers. So it's actually a form of taxation, a hidden form of taxation, because you see that you can buy less with your money, but it's not obvious as it is with taxation who is behind it. And it's often, politicians can often get away with blaming somebody else other than themselves for it. So historically, money has been somewhat based on commodities, and so the rate of inflation has been pretty low. So here's a chart of 800 years of the value of the pound sterling. And we can see that around the beginning of the 20th century, specifically around the time of World War I, was when the UK started going off the gold standard. And since then, we see this huge depreciation in the value of the pound. So if we zoom in on the 20th century, we can see that 99% of the value of the pound sterling has been stolen by politicians since 1900, which means that 99% of the value of the money that people held has been transferred to, to the recipients of the new fiat currency by the state. And by the way, even when the nominal value of money remains stable, when the nominal inflation rate is low, such as in the last 20 years, it doesn't mean that the government is not printing money and stealing the value of our currency, because the economy keeps growing. We continually become more productive as technology improves, which should be obvious. With all technology has the potential to create value with less work. So since 1844, what does it say? In 10 minutes, you can make more value than somebody worked in a 12-hour day. So, for example, it used to take 3 hours to earn the ability to buy a chicken. Now it takes 10 minutes for the average wage, and so on. So even though you might not see high nominal inflation, still the government continuously is printing money because it says it doesn't want to have deflation, but what it really wants to do is have this hidden form of taxation to favor politically connected groups. Yeah, so here it shows, you can see the time to earn a chicken has gone from 3 hours to 10 minutes. Okay, so let's talk about Bitcoin. So Bitcoin is the first decentralized digital currency. Let's see how much time I have. And it's actually a standard, public standard. It's a network, and it's a ledger of transactions and ownership. And a Bitcoin is also a denomination of the currency. And so currently a Bitcoin is worth about $250. And I won't go into the technology, but Bitcoin works by Bitcoins are spent when you prove that you own a Bitcoin, and then you send the Bitcoins to a new address. And when the recipient of the address proves that he owns the Bitcoin, then he can send it to the next party. So you can read about that if you want to know how it actually works. But that's not the important part. So how is Bitcoin like fiat money? So it's not a commodity currency. Bitcoins are just mathematical, they're just numbers that can be, derived by certain algorithm. They have no inherent value. They cannot be exchanged for stuff by a central bank. It's just a ledger that has value because there's a consensus that it has value. But how's it not like fiat money? So there's a finite number of Bitcoin. They're mined, starting from zero, and there will only ever be 21 million that can never be created. There's a somewhat fixed number that's created every 10 minutes. They're mined by distributed effort, not by any central authority. They can be used in a way that hides the identity of the user and the origin of the funds. So that's not inherent in the technology. And they're impossible to steal by violence, brute computational force, or fraud by central authority. So many Bitcoins have been stolen, but you cannot steal it by physically taking them from somebody. You have to hack into their computer or coerce the password out of them. They can only be stolen with the collaboration of the victim, basically. So that is very different from gold, which you can break into somebody's house and steal it, or you can inflate money and make somebody's savings worthless. But with Bitcoin, if you have a computer that's properly secured, there are hardware Bitcoin storage devices that are basically impossible to steal from unless you coerce the password out of the owner. So it works as a consensus mechanism, which means that there's a ledger, and the history of transactions is determined by a consensus of all the participants. So there's no central authority that can commit fraud. You can only have fraud if a majority of the participants engage in it, which is an actual problem, but that is a technical problem, and it has technical solutions. And Bitcoin uses a distributed network or onion routing, so that it can be impossible to know the real-world physical identities of the parties engaging in transactions. So here's some just pretty pictures, because you can't have a presentation about Bitcoin without some pretty pictures. This is what a market price breakdown looks like with bids and offers at various rates on a particular exchange. You can see that the number of Bitcoins in circulations is going up at a very steady rate because the number of Bitcoins mined per unit of time, can I move this out of the way, is very stable. You can see that the number of transactions per day is steadily increasing, which with some qualifications we might take to mean that the adoption of Bitcoin is increasing. You can see that around May 2012 there was a sharp takeoff, and it's continued to take off from there. We can see that the US dollar transaction volume peaked during a spike when Bitcoin went up to over $1,000 per Bitcoin in late 2013. It's dropped off since the peak, but it's still, the volume is pretty good, in the neighborhood of $60 million per day. This is an exchange that I built. Okay, so let's take a detour and talk about where does the power of the state come from? And let's talk about market versus state action. So I think this is not controversial point that I will make. The market activity consists of voluntary transactions. One person trades with another because it will benefit both of them. Otherwise, they will not engage in it. And market institutions thrive to the extent that people choose to keep voting for them with their pockets. So corporations are successful on a free market to the extent that people, continue to patronize them. On the other hand, the state, governments, are funded by involuntary transactions, taxes, outright confiscation, or inflation. By definition, governments don't engage in market transactions. They are funded by involuntary transactions. So when we compare the market versus the state, we can see that the market system is driven by prices, and it tends to select for the maximization of consumer satisfaction. The political system tends to select for the maximization of political power. Successful corporations are those that make people enjoy their products. Successful politicians are those that get people to vote for them, either by redistributing values from the market to those interest groups or giving them promises that they like. And you can read my thoughts on that in detail if you want to. And so let's talk about what is exactly political power. So my point here is that the state is a parasite. And I mean that not just as a negative statement, not just as a criticism, but objectively speaking, politicians get their power from market. They don't exist independently because they don't produce anything of their own. They have to somehow collect money or assets from the market in order to have any capability for action. A poor society will also have the power of government grows with the power of the market, because it is from the market that the state gets the funds to pay its employees. And effective governments are those that exist in a somewhat free society. so governments can pass all the laws they want, and they can print all the money they want, but there must be a market there to produce goods that they use to fund their activity and to pay their employees. And so, for example, for a country to wage war, it must have a somewhat free economy in order to be able to build all those tanks and bombs. A country that doesn't have any market is not going to be producing enough things. The government is not capable of effectively producing assets to engage in policies on a large scale. Um, so the state exists, it only engages in involuntary transactions. It doesn't produce anything of its own. And its power derives from its ability to seize power from the market, which in practice means the power to tax and control over the currency. So yes, the government has bombs and nukes and tanks and so on, but in order to pay for all those things, there must be a market, and it must be able to tax that market and or control the money to pay for all those toys. Okay, so now we get to the central point. Why is cryptocurrency such a disruptive technology? So I will talk as an example about three disruptive impacts of cryptocurrency, which could be Bitcoin, but maybe Bitcoin will be replaced by something different, but operating on similar principles. So first, I'll make an aside and talk about something very different. The printing press was introduced by Gutenberg to solve a simple problem. It was very labor intensive to reproduce written works, by writing it out by hand. But the impacts that it had went way beyond the intended purpose of the printing press. So because it made knowledge easily transferable by indirect means, the medieval guilds whose power was based on the restriction to hereditary transfer of knowledge and secrets, their power was destroyed because suddenly knowledge was so easily reproducible. The power of the church, who had the monopoly on the content of the Bible, was fragmented because now it became so easy to publish the Bible. The scientific revolution depended on the ease by which new discoveries could be spread and promoted. So the point is that disruptive technologies are difficult to foresee. Some may seem like solve one specific problem, may be very disruptive unless you have a good idea of what kinds of new things they would enable. Okay, so the first thing that cryptocurrency makes possible is strong ownership and identity. So you can use the Bitcoin blockchain to tag ownership of real world assets. So you can have what's called a colored coin or a distributed ledger where Bitcoins are used to track real world assets. And when you want to sell your car to somebody, they buy your Bitcoin, and there's a comment in the transaction, this is for this car, and there's some authority that recognizes that transaction, and now it becomes a permanent record. There are many ways that this is implemented, but the point is that now the cryptocurrency itself, by means of consensus, is able to recognize property rights and to have a ledger of ownership. Okay, so another thing that this affects is the Internet of Things. So my iPhone is encrypted. It knows my identity. If somebody steals it, there's some value in the hardware, but they cannot easily use it. They cannot erase it because it knows who its owner is. It's encrypted. You can erase the data, but it's going to ask my password before it lets you use it for any other purpose. And all the things we use are now beginning to have a microchip. And this idea of the Internet of Things, that all things will be connected to the internet, I will mean that all things can have a strong identity. It knows who its owner is, and it will only act for its owner. And the information of the blockchain, it means that, and because the blockchain can hide the real world identity of the author, means that there's some really interesting implications in eliminating the monopoly of the state on being the entity that enforces property rights and being able to know who owns what. Okay, so on autonomous financial instruments, very interesting technology. So you can use the blockchain through some add-on technologies to process a simple rules engine. So you can have some business logic that the blockchain itself, the distributed blockchain executes and moves value according to some rules. So you could have what is called a smart contract, which observes certain actions on the blockchain and then applies rules. So you can build a whole corporation that employs people and has pays dividends that runs on a blockchain, not on any one computer, but its rules are encoded in a language that actually executes on the blockchain. And there's a bunch of projects that are actually doing this, such as Ethereum, which is basically a virtual machine that runs on this parallel network. And you can use basically like a gateway to make it be able to transfer bit value from Bitcoin to this network. Okay, another interesting things that cryptocurrency enables is prediction markets. So these are markets that predict the outcomes of public events, which seems pretty innocuous, but you can do some really interesting things with prediction markets, such as if a market predicts certain scientific, discoveries, or if you have rewards for predicting some scientific rules, it can act as an incentive to invent new technologies. You can follow the link in the presentation to that. Assassination markets are interesting innovation where if a bunch of people don't like somebody, they put up a reward for being able to predict when they would die. And other things such as public policies. Right now, there's no way to get an idea of what the people really, where do people really put their money on whether some politician's promise is credible or not. But if you have a prediction market where people make actual predictions on, let's say, the impact on the GDP of a certain policy, people vote with their dollars on their confidence in certain actions by corporations or governments, and so influence the actors themselves. And so they create a much more accountable and less uncertain world. And that will become increasingly important as change accelerates and technologies become increasingly powerful. Okay, so let's jump back a second. What is the nation state? So it has a bunch of assumptions, such as pretty sacred borders, restrictions on trade, control over the economy and monetary policy, centralized bureaucracy, uniform culture, standing military, and the idea that I want to present is that this assumption will be challenged by the technologies that cryptocurrency makes possible. So let's look at the various ways that the state maintains power and the ways that it will be challenged. So money in banking, obviously, a distributed digital currency is going to, that is inflation proof, and all, much has much lower transaction costs, is really going to challenge that. Property titles, as I discussed with colored coins, will be challenged. Education, well, the internet is solving that problem. Identity, so using cryptographic identity, you can have much stronger proof of somebody's identity than pieces of paper um, and what's the word for it? Laminated cards with photos. Other things we still haven't figured out, such as um, have how we will measure somebody's reputation or competence. But right now, there's a lot of experimentation with smart contracts, prediction markets, and so on. And not all problems are solved by uh, cryptocurrency, and there's many questions. But the ability to have an economy that is outside state control will enable a lot of these things. So um, I guess one important question is, does the market have an advantage over the state, or will the superior military power and control over taxation always give the state the edge? So my thoughts on that is that change is accelerating. If you look at history, the growth of capital, the growth of knowledge, the increasing computational ability of society, not just technology, but both in terms of growing population and growing information, means that things are moving faster and faster. And the state is able to move arbitrary amounts of the economy, or to try to maintain its power, but it doesn't produce anything of its own. So all its power comes from ability to subvert and redistribute value to its own means. And it's not very good at running projects efficiently. It's always going to be slower than for-profit corporations because of the economic calculation problem. And accelerating change means that innovation cycle is becoming ever shorter. And so it becomes more difficult for the state to become relevant and subvert new value structure. Eventually, the market will move so quickly that new forms of value are created faster than the state can find ways to tax them, which could mean, for example, that, let's say, 3D printing takes off and you can print anything you want. And what it becomes valuable, not the things that are in stores, but the 3D patterns of the things you print. And all of that is just bytes, which are encrypted. And that's a new value that is difficult to observe. And the digital property ledgers and intellectual property of that kind will become new forms of value that will become increasingly difficult to monitor, track, and control. So here's a timeline of how things might play out. It's not a prediction by any means. It's just one possible scenario. So what we have right now is a rapid evolution of the different technologies that are building on the basic concept of Bitcoin, of a distributed ledger that works by consensus. And it's maturing and becoming more easier for ordinary people to use. So what is also taking off right now is 3D printing, additive manufacturing. And what might happen is that established industries will be overturned by this informal economy where any physical asset can be scanned and replicated for the value of its atoms, and you'll have a major pirate industry that operates in an informal economy. And if there's going to be a need for some black market monetary tool that facilitates the development of a market for all these 3D patterns, Because at first you might pirate products created by the major corporations, but eventually you'll have a distributed manufacturing industry, and there will be a need to pay for all these products. And powering all this, or enabling all this, is ubiquitous encryption and cryptocurrency and anonymity that makes this whole market invisible to state observers. So what this is going to do is cause the tax base to collapse. So what you might have is this idea of an 80-20 threshold, where the income taxes keep rising because more and more transactions are happening in the black market economy, but all the value is moving to these intangible assets, such as 3D printing recipes or microchips that are very hard for these bureaucracies to monitor and tax and control. And so the nominal income tax will be very high, but actually the government will have ever less power because all the value will be in cryptocurrency and these hard to track assets. Okay, so governments are going to try to react to this by trying to seize and prohibit and regulate this black market economy, which will now become the majority of the economy. And now that people can print, weapons of mass destruction in their homes and their 3D printers, there's going to be a lot of chaos and violence and instability. And fortunately, the cryptocurrency itself provides adjudication mechanisms and means to enforce property rights, means to solve disagreements, means to punish violent individuals. So ultimately, the state will call in the military, and that's where things become interesting, because you can use the anonymity and 3D printing and prediction markets in very interesting ways. So that's the basic idea, and you can read more about Bitcoin and various manifestos that people have about how this will play out, and the innovation that's happening in the cryptocurrency space. And it goes without saying that Bitcoin is just one technology, but the idea to have an economy that cannot be stopped or controlled by the state, that cannot be taxed, enables a lot of other things. And Bitcoin by itself doesn't do much without the ability to use it to act in the real world. So we're going to see a lot of exotic, highly disruptive technologies that are invented. Censorship-proof, distributed software-defined packet radio, the ability to print living organisms, distributed energy grids, being able to print anything, reputation that is cryptographic, untraceable to physical identity, prediction markets that forces accountability by public figures. There's a lot of exotic stuff that's coming. You can read about some of these things, but we have an idea of what is possible. We have no idea what the future holds. But the ability to have this informal market is what is going to be powering and driving all this.